Hello guys, good morning. I'm gonna do a very quick update. I have some stuff to do, but this move that we have overnight is pretty intense and I wanna cover it. I wanna give you my take on what's going on at the moment. In very short, I haven't entered to the market because yesterday I was waiting for 92.5. That was my area of interest, but I thought it was gonna take a few more days, to be totally honest, to get there, so I haven't prepared my exchange and my limit orders. If you enter at 92.5, the area of 89 into 88, 87 is an area of big interest for me. So as soon as I can get my hands around it, I'm gonna share on Patreon what was my entry and where am I gonna actually do my first entry. Let's look at the 4 hour, how it's looking. You can see that this trend line hasn't yet broken out to the upside. Yesterday I gave this as the line defining whether we go bullish or not. We got a rejection, and since the rejection we have done nothing but breaking levels down. First, the global support in here with the white line at 31. Then the PNR, we pinch it and we push it lower. Now it's at 21, and there is a chance that we can still carry on into 17, as I said in my video yesterday. I have the circle in here to give us the idea that we are having the reversal. And it's important, if you are a conservative trader, to wait for that. If you just want to add at areas of interest of liquidations, you can still start entering from here, but bear in mind that that is a higher risk. On the 4 hour, you can obviously tell that we left the ranging period of 94.9 to 98.2 to the downside. We went into this trend line and we didn't respect it at all. I think I woke up overnight. I went to the toilet and I look at the price and it was 92.5, and I was like, oh damn, I didn't prepare the exchange, I didn't leave any limit order, I'm gonna miss the 92.5. And as I look at the candles that were coming down so aggressively, I said, I'm gonna let it run a little bit more. I'm gonna wake up in the morning and see if we are still there. I have the feeling that we could go a little bit lower on this in the morning still with the next market opening. And as you can see, this from 92.5 went all the way to 88.2. So that means that it took the immediate liquidity of the short term and it started taking liquidity from the longer term as well. We're going to look into that just in a second. On the daily, we have done finally a full reset of the RSI. Look at this. If we see the 1, 2, 3, 4, the impulsive moves to the upside, each of the channel to the upside, when at some point any reset. Some of them reset at the PNR, some of them at the ascending trend line, and in this case, this is one of them that is perfectly resetting at the same levels as in 2023, in June 2024, in August 2024, and now it's precisely there on 25th of February 2025. So is it a coincidence? I don't know, but that's why I follow these lines. You can tell that the PNR didn't hold the price like we did on the wave 3. The PNR at that point was the perfect point to buy, to add to your position, and we didn't go for the red. So if you wait for red there, you miss the rally and you miss the all-time high. Or I think this was into 73, March 2024. Then we got the wave 4 that now has reset at 31, and the next question is it going to just stop at 31, or is it going to pinch like in August 2023 and then produce something like this? I don't know. So if you want to be conservative, you have to wait for a breakout of the yellow line. If you cannot wait any longer and you think that we already took the liquidity, which is fair enough of an assumption, like we're going to leave the CME gap for later, if that is your assumption, then you can start looking for bottom informations in this area and start taking this as a strong support and then aim for higher prices. On the daily, let's see how that looks. Our target is this red line that we left there. That was the target of the daily. That's the bottom of the range. So now, if we want to hold this thing, we already hit the red, but we are below the trading range of the volume profile. That is at 90.7. So for upside, we need to reclaim 90.7 and start pushing higher from here turning it into a liquidity hand like that one from 14th of January. If we don't do this and we close the daily below that 90.7, then there is chances that we carry on lower. And at that point, we have to start talking about the longer targets, bigger targets that come from the weekly. The weekly is at the moment bouncing off the bull market support band, which is great, but if it doesn't hold like it hasn't in previous times during this bull market, we could go for the actual technical target of the weekly, which is 80.5. I say that technical targets tend to fail on higher time frames for Bitcoin, particularly if you are in a bull market and you are targeting levels that are achievable, much more difficult in a bull market, not impossible, but doable. So there is that chance that if we start losing those levels and we don't reclaim on the daily, then this weekly closes like this and it starts setting a precedent for an going for the full target of the technical on the weekly. On the weekly, we did something really low likely, being in a channel and breaking down again. There is something going on in here that doesn't look great. For example, being in a red candle on the yearly for the first time with the liquidity coming in. I'm seeing the liquidity coming in and we are not necessarily respecting it. People are definitely capitulating. SOPR is at the low band constantly for many days, I will say for over a week, and that is a bull signal by itself. On the monthly, support is at an RSI of 61, and that I think I have it in here. 61, yeah, that's a red, and that is 82 on the monthly. So if we do a full reset on the monthly, we will be touching that line in there. And yeah, very difficult now that we are at 25th of February, that in just 3 days we undo the monthly bearish cross on the stochastic RSI. Deposits continue to be the case for large holders, so they are accumulating, what can I say, at these levels at a faster pace than withdrawing, which is good. But on the ETFs, we have an inflow of 516, which is the largest that I see probably in the past 2 weeks, and we are back into extreme fear. So we are supposed to be doing the due diligence, which is getting your cup of coffee, slapping yourself in the face 3 times until you are awake enough to understand that in extreme fear, we are looking for entries, not for exits. Okay. And that is what I do. Okay. You don't have to do as me. You can see my cheeks are red this morning and I'm ready to look for longs. On liquidation levels, we took the red, we took the 92.5, but we started slipping without any recovery. So the price pinched this thing. It went for all of it, and all the recovery started happening from 90.6, and it couldn't even come back to the red, showing that there is a bounce, that there is bulls coming in and trying to rescue this thing. So this just roll over and I went to sleep and the thing went just back down to 88. And now I'm looking for a long and I need to do stuff. I need to go to the doctor to see this thing once again. Once I come back, I need to hopefully catch a long in here, set up a new exchange. You know, Bybit, I had everything ready for everything. And now with Bybit getting these issues, I need to do it in OKX. So that is my first option, but let me know in the comments if you will do it in another exchange. Which one would you use? So we are at the moment in the process of taking older, longer term liquidation in here on 88. This stops at 86.4 or 5, but there is another one at 84.6. So some people are saying maybe we take all one. This 1 to 3, I have it in the chart pretty much 6 months ago, since it started building up this liquidity. So now we're going to talk about 1, 2, or 3. Let me know in the comments if you think we are going to stop at 1. 2 is at 78 on the CME gap. 3 is 68. That means going back into the previous range, previous megaphone pattern. I was expecting that for bear market, so I wouldn't say 3. My opinion is 1. Okay, but I don't have a crystal ball. So if you do, leave it in the comments down below. At the moment, it's a party of liquidations to go back up. Every long got liquidated. We have 1.32 billion in liquidations. You have so many longs coming in here. You have extreme fear. You took all the large liquid leverage, high leverage positions, and you have a bidding at 11, which is not that much, but I assume that the amount of liquidations here on the bottom end must be huge. You have 1 million. That's huge. It's huge. That is a great data point, double than yesterday. And liquidations, we had liquidations as usual. So if you think that this is a lot, it's just as much as 3rd of February. Okay, so there can be another one, and there are people waiting for 78 in here with large orders, and they took out 85 for some reason. When the price was coming into 85, they took it out. Be careful, have cash to deal with this situation, because it could bleed a little bit more. Hopefully not, but be prepared in any case. And I hope you appreciate the update. Let me let you go with the fair value gaps. This fair value gap in here into 95 is pretty thick and fat. I think we could take it. That is something interesting as well, because we have 1 million in liquidations to the upside to tackle the shorts, and possibly here shorts entering, getting, thinking that this is just a free fall all the way to 60. They could get liquidated with just a bounce in here, and not necessarily re-entering the previous range, but just a rally into their now resistance. This is 94.8, so we could go and take that fair value gap. Keep that in mind, and I'll see you later. Hit the like, subscribe, write down a comment, and do all those things, and hopefully the doctor is competent and can tell me what the hell is going on with this, that I'm having issues since pretty much before Christmas. See you on the next one. Bye bye.